overnight reshuffle has had a negative impact on the rand, which has gone into free fall. It fell from 12 Rand 80 yesterday to 13 Rand 60, making it the biggest weekly slide since 2015. For more on this, let's go to our reporter Mateo Quaripe at the Johannesburg Stock Exchange. Mateo?
Thank you very much, Shahan. It was a reshuffle at the midnight hour, and of course markets were closed in, but currency markets don't sleep, of course, and the rand did react to these news that the finance minister has been sacked and replaced with Minister Gigaba. And at that time, overnight, the rand fell about 3%, and that made it to about 8% for the week. You do remember that on Monday, the rand was in its 20-month high at 12 Rand 31 cents, only for the president to call the finance minister and his deputy Mcebisi join us back from an investment roadshow in the UK. And since then, there's been rumors of a reshuffle imminent for the finance minister, and it finally happened in the late hours yesterday. And of course, the markets have opened now. The rand is now 13 Rand 41 against the dollar, but as you say, still free falling. Joining me now to unpack this is Investment Solutions Chief Economist Lesiba Mutata. Lesiba, how are we expecting markets to react today, especially since we're having our second reshuffle of a finance minister in almost 2 years?
So the Asian trade in the currency markets, although there was a sharp depreciation, it's not as bad as one would have expected. I woke up thinking I'll see 14 to the dollar on the rand. So there's some sanguine response that's happening. Even now, shortly after Johannesburg opened up, we still see that the rand is holding up there. Europe will come in an hour's time, and later on midday we'll see the American trading also come through. So the bottom line about this is that when markets expect an outcome beforehand, their response are normally not as exaggerated as when it's just a shock that is not being expected. This was brewing. We saw it come through, and the markets are beginning to think about what it means. It also depends on what the authorities are going to say. We need to look at those bank shares, and we need to look at those bond yields. If they continue to decline, it means they're calling for the authorities, the new ones, to come and say South Africa is still on course, policy is still intact. That's what's required right now.
And let's speak about that digestion that the market has to do about the new finance minister in Malusi Gigaba. How do you feel they will digest the new finance minister, given his background? He is an experienced government man, but is he a treasury man?
Well, admittedly, was not directly exposed to economics or finance, both of them. However, they inherit an institution of world class, right? And countries don't wake up in one day and lose its institutions. They're inheriting also a cooperation with the central bank that is of world class. So that infrastructure needs to be honed onto to assure investors that SA is still on course of prudent fiscal policy. Doesn't matter the background, doesn't matter what happened in history. But where we are now is we've got a new finance minister, and we're waiting for words from him to assure investors that South Africa is still on course on prudent fiscal policy.
And he walks into a very tough South African market at the moment, the same market that Finance Minister Pravin Gordhan had been in with low growth, and trying to convince investors that South Africa is the way to go in terms of investing. But the Finance Minister did go to the UK to try have those meetings, but he also had meetings with the credit regulators as well, who could downgrade South Africa because of this political turmoil. What do you think would be expected of him to try and appease that?
Already there's been comment by a few rating agencies saying they'll be worried if the move on fiscal policy is more populist. That's why there's a need to make sure that we stay on course and South Africa does not turn into becoming, we're seeing expenditure growth at 7%. When that goes faster than 7, without a requisite consolidation, in other words, if we were to move away from that which has been put out in February, it could prove problematic. Rating agencies move on facts and data, and it's not a one-night decision that creates a credit quality decision. So what's important right now is what happens by the new authorities. What do they say? And how will that be different from what we've seen in the budget? We ought to remember that South Africa has a medium-term budget policy framework, which means some of these commitments are for the next 3 years. Depending on what happens in the leadership, those 3-year commitments stays until they get to be changed, which they will have an opportunity to do so, but that's only in October.
And let's try to bring it home here a little bit about what this all means for the ordinary South African walking the streets, ordinary South Africans going to work, taking their children to school. And, you know, what does this mean for their pockets? What does it mean for the breadbasket? What does it mean for their own pensions?
A challenging time. On the one hand is that confidence has been knocked down. There's a concern. That's why we need to see authorities come and tell us where we're going. If we get a sustained depreciated currency, it could prove very challenging on the inflation outlook. The governor yesterday had said, while inflation has improved, the outlook can be challenged if you had a sustained rand weakness. And that is why all the authorities, I would argue including the central bank, ought to come out and tell South Africa, the ordinary South African, that South Africa is still on course, is not materially different from what was started in 1994, because countries and institutions are bigger than individuals.
All right, then Shahan, the new finance minister Malusi Gigaba is in the hot seat along with his deputies Fiso Buthelezi, who will have to now appease investors and reassure them about South Africa's policy path. And I guess we'll be tracking those markets for you as the day goes by.
All right, thanks very much. Our reporter Mateo Quaripe joining us from the Johannesburg Stock Exchange.